If you're a landlord and want to know what expenses you can claim in your rental accounts or UK buy-to-let property accounts, then please watch this video. Hi, this is Gagananand from 121 Accountants. In this video, we'll talk about the following things. Number one, what is pre-rental expenses? Second, what expenses you can claim? What is a finance cost? And what is a replacement of domestic items? What is pre-rental expenses? Any expenses you incurred before the property is let out, those expenses are called pre-rental expenses, and those expenses are also a allowable expense. For example, if you acquired a property in June 22 and the property was first rented out in September 22, but before it can be rented, any expenditure before it can be rented, it needs a bit of modernization. So any expenditure you have incurred from June to September is an allowable expense. Next is list of expenses. So what are the list of expenses which you can claim as an expense under the, or which are allowable expenses under the buy-to-let UK rental property accounts? Number one, mortgage interest. Although there are various rules regarding mortgage interest, but still you get a 20% relief on the mortgage interest you pay. The only thing you have to remember is if you have a repayment mortgage, only interest part is an allowable expense. Secondly, gas safety certificate. By law, every landlord in the UK needs to have the gas safety certificate before the property is let out to the tenant. So any expenses incurred to avail this certificate is an allowable expense. Likewise, electric safety certificate as well is by law, every landlord needs to have that. So any expenses incurred to get the certificate is an allowable expense. Next is repair and maintenance. So any repair or maintenance or decoration, painting, changes of taps or changing door handles, locks is an allowable expense. Building insurance. Every landlord should have a building insurance because most of the UK lenders, they also require, or that one of the mortgage condition is that you should have a building insurance. So this is also an allowable expense. Next is any other insurances like appliance insurance or home care insurance or any emergency cover you're paying monthly. Those are also an allowable expense. So you can also claim as a deduction against your rental income. Next is ground rent. Ground rent is generally payable if it's a leasehold property like flats. So ground rent is payable either monthly, quarterly, 6 monthly, or yearly. So that's also an allowable expense. Next is service charge. Service charge is also generally applicable to a leasehold property like flats. So if you're paying any monthly or quarterly or half yearly or yearly service charge, that's also a allowable deduction against your rental income. Another one is estate agent fee. So if you hired a estate agent or if you appointed a estate agent to manage your property or to let the property out, any fee you pay to them is also an allowable deduction expense. Another one is utilities. Utilities like gas bill, electric bill, water bill, all these utilities, if the property is vacant for a certain period, if landlord has paid that from his pocket, so those are also can be deducted against your rental income. That's also an allowable expense. Likewise, council tax. If property was vacant for certain months or few weeks, that time of the time for that time period, any council tax paid by the landlord is also a allowable expense. Another one is internet. If again landlord has provided the internet to the property and tenant is not paying, landlord is paying out of pocket, you can claim that expense as well. Use of home. If you're managing your buy-to-let business and you don't have any particular office, but you're using your home or a corner of the home where you have a desk and a computer you're using to keep records, the rent paid or not, any expenses. So you can claim £6 a week allowance as a use of home allowance, £6 a week as an expense into your against your rental income. Another one is traveling and subsisting. Traveling again mileage allowance. So traveling means that let's say if your property is a bit far and you have traveled certain miles to manage your property over the year. So whatever miles you have traveled, you can claim a mileage allowance for the miles you traveled. There are few conditions attached to it. To claim a mileage allowance, you have to keep a mileage record. Mileage record means from which postcode to which postcode, how many miles you have traveled, and what was the reason of the travel. You have to document it and keep it in your file. And for first 10,000 miles, you can claim 45p a mile, and anything above 10,000 miles, you can claim 25p a mile. But these miles allowance covers all the costs for your car, repair, maintenance, insurance, fuel, any cost related to your car is compensated against this mileage allowance. Subsistence expense. This is again if you're traveling to see your property. If your property is a bit far away, let's say your property is in Manchester and you are in London, and you left in the morning to visit your property and you miss your lunch, so you can have a light lunch or a sandwich or anything is reasonable expense. You can claim that as a subsistence expense, but only reasonable expense, not a lavish lunch. Now, next is what is finance cost. So, finance cost have four components. One is mortgage interest, one is product fee, one is arrangement fee, one is broker fee. So, mortgage interest is the interest which you pay on your loan or on the mortgage. Product fee is a fee. Many banks, they charge you as a product fee. So they charge you a fee for the product, and that is also an allowable finance cost. And again, arrangement fee. Some banks charge an arrangement fee, a percentage of fee. Again, it's another name for product fee. This is also allowable expense. And if you have paid a broker a fee, that fee is also an allowable expense. So these all four components in combination is called finance cost, and you get a 20% relief on the finance cost. But one thing again I'll mention, which I've already mentioned earlier, that capital repayment part is not an expense. Only interest can be claimed as a finance cost. So it means if you have a repayment mortgage and in your monthly installment there is a capital element, that capital element is not an expense. Only the interest part is a expense and can be claimed against a finance cost. Now we'll talk about replacement of domestic item. So first understand what domestic items are. Domestic items are like all white goods, fridge, freezer, washing machine, dishwasher, all furniture like sofa, bed, dining table. These are all domestic items. If you are changing or replacing a domestic item on a like-to-like basis, only those costs can be adjusted against your rental income. If you're buying it first time, then this cost is not allowable. If you're replacing it only on like-to-like basis, then it's allowable. So like-to-like basis means that if you have a fridge, a standard fridge, which costs you about £400, but if you want to replace, if you want to replace it today, it will cost you about 400 or 450 pounds, same value, then it's like-to-like basis. But if you're buying a new fridge with the upgraded facilities, upgraded model or upgraded feature, and that will cost you let's say £1,000, but you can only claim up to £500 or £400. What will be the cost of the new fridge if you're replacing with the fridge which is already there? So like to like is very important to get the deduction against this replacement of domestic item. So list of domestic item are sofa, dining table, furniture. These are movable furnitures. Then furnishings such as carpet, curtains, and linen. Household appliances such as fridge, freezer, washing machine, dishwasher. These are just a small list I've gathered, but there are many other items as well, so which you can discuss, or you can check on HMRC's manual if you need to know. There's a full listing what is classed as domestic item. And hope you have liked this video, and I've tried to cover the expenses which you can claim, but although this is not a full list or exhaustive list, but I've just tried to gather the most common expenses which landlord can claim or which landlord do sometimes miss out on. So I hope you like this video. Please don't forget to like, subscribe, and share my channel. Thank you for watching.